Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, I'm just going to give a brief 5-minute market overview. Of course, many of you are probably seeing the bullishness on the charts, and of course, it's real. I mean, there is the real possibility, as I discussed in the last Macro Monday episode, that Bitcoin could have bottomed out, that perhaps the tech sector of the stock market has found a little bit of a floor, and because Bitcoin and thereby the rest of crypto trade kind of like tech meme stocks, right? They have a certain factor of the tech sector of the stock market. That's how correlated this asset is to those other assets, that if the stock market pumps, then probably Bitcoin and crypto will pump as well. Now, does that mean there's enough money in the system to pump every coin that you may want to get into? No, but it does mean that many of the big coins have the possibility to pump, and it only depends if the market is feeling risk on if crypto will pump. If the market is feeling risk off, then they may just flee to names like Apple, Microsoft, Nvidia, these type of safe names, and maybe crypto will get a little bit of benefit from their pumping, but it may not get the full enchilada. So the degree to which crypto pumps is going to indicate just how risk on this market is. Without any further ado, let's just jump into the charts and let's go ahead and take a look at our current setup on the 24/7 exchanges. We do have this pretty interesting head and shoulders being put in here. I'm not sure if you guys want to ignore this wick or not. It may not be a perfect head and shoulders, but if you are a patterns trader, that does suggest the possibility of getting to that $24,000 area. And also, if we were talking about the broadening descending wedge that we first put in this chart, and if you just consider that we have essentially moved down that broadening wedge, broke out of it, retested it, and then if we pop back up, the measured move is to 23,000, approximately 400. So anyway, if we're just talking about patterns, we're looking at an area between 23,400 to $24,000 as a potential reasonable target for pattern traders. Now, does that mean that we're going to violate this 4 months long resistance that we have been printing on the charts? Not necessarily, and hold your hats. I will be covering this in an upcoming episode of Macro Monday where we discussed the worst case possible scenario. I covered the best case possible scenario in the last Macro Monday. You can check that out, or you can wait till tomorrow to see the next installment of that series. And, just if we just get beyond the macro and just suggest that we do pump out of this channel, that we do have that bullishness that can break this resistance that's just been suppressing us for 4 months, then what would be obvious areas to look for? Well, I would suggest, and because this is just going to be a quick 5-minute report, that the targets that you want to be looking for are probably pretty solid resistance of the weekly 200 around 26,000. Let's just say $500 would be a good maximum target. Now, there are other reasons to suggest that we could possibly get to 30 to even $35,000 on a real solid pump, but just reasonable expectations. If we do break out of this downtrend, there is the possibility of getting around this $26,500 area, and then it's going to be pretty pretty dicey from there. Of course, I already mentioned that the pattern structures would suggest anywhere between $23,000 to $24,000 if you want to be a little bit more conservative on your profit taking. And then, of course, we have the 200 MA, not EMA, but MA, approximately around 22,800. And that does tend to be a tough nut to crack, especially when we're talking about the weekly. Of course, the chart that I have on the screen is the daily, but I am just marking off the weekly 200s so that you can see where that really long-term solid resistance might be. And then when we're talking about our just current local daily resistances, really what we need to overcome is this 21,200. As long as we're under 21,200, we have the opportunity to continue to fall and to continue to perhaps even break down on this macro structure. And so claiming $22,200 is going to be extremely important. And if we're even able to get above that number within this chart and hold it solidly on a day candle, even if it's just a thin little candle just trying to struggle to break out, then that would be a very good sign. We do have, a lot of momentum on our side as long as we stay above 20,000. But really, the bottom line for our support is going to be 19,700. And if we break below 19,700, then you can pretty much just accept that we're going to head lower because we will have lost our daily supports, and everything that we've been building up on the daily will start to become broken, and you can probably front run this trend around that area. However, there is a bit of conflict with the 24/7 exchanges and the CME charts. Of course, the CME charts are the charts that actually, trade only during business hours. They're closed on weekends and holidays. They're closed on after hours, and currently the market is closed. And so this chart may need to get synced up with the other charts that we've been talking about on the 24/7 exchanges, such as FTX, Binance, Coinbase, while these more stock market charts, aren't really printing the data from Saturday. When the markets do open, then we will see some type of synchronization between the 24/7 and the CME charts. Now, what do we see having happened on the CME charts, these professional exchanges? Well, basically, we filled the gap over here at 21,000, and we also filled the gap around 20,200. Now, these weren't very serious gaps, but the fact that we had this upthrust, this could have been a market fake out while we are moving to the downside on the professional exchanges, because they may simply have wanted to fill those gaps. And that might be what this move up at the end of last week was about, just filling those little tiny gaps before we continue our way down. That's something that you should keep in your mind, because we have a different setup here on the CME charts. And once we get the volume of the professional exchanges, they could change their mind from what the 24/7 exchanges are doing, and they could perhaps take this market in a different direction. Now, the critical support on the CME charts is actually 20,000, let's say $500. If you lose $20,500, you're most likely going to turn around, okay? And while we do have the possibility to capture momentum as long as we're above 19,000, that losing that 20,500 is not going to be a good thing. You could perhaps move it a little bit lower, but essentially you really want to watch us hold on to 20,000. 500. And then we're going to probably be meeting some stiff resistance or anyway, a critical boss that we need to beat is going to be this 21,700. And that's going to be some type of guarantee of bullishness if we can get above that number. It does also seem to just coincidentally correspond to our macro downtrend. So, of course, that macro downtrend is basically the ultimate boss. But even if we do breach that downtrend, we do have our 200 MA here at 22,500, and we have our 200 EMA at 23,900, effectively 24,000. And so if you want to get really bullish and perhaps take out these CME gaps that we've left above, and get perhaps even in the neighborhood of that 28 to 35,000, then you really are going to need to take out these weekly 200 MAs and sit above them and see if we can just pop up. I'm not sure that's necessarily in the cards, and you can see that there is a pretty big resistance zone between, let's say, 22,000 and 24,000, pretty much on both charts, just in general, right? 22,000, 21,800 to 27,000. So we're really going to have to see if we can defeat these bosses or if we just plummet down to hell. Now, there are a lot of things on our side. The weekly potential to pump is extremely high right now. On the weekly, we do have a good opportunity to potentially just send it if we can break out of that macro descending channel here. And that's going to be represented in a number of different ways where basically we have extremely low directional volatility. And as long as we can get the Stokes and the momentum and the RSI and all of this stuff on our side, then we have the possibility to just send it. Just want to briefly double check. Yep, both are pretty much the same in that regard, and both do have the opportunity to pump. Okay, so guys, that was your brief 15-minute overview, and I always try to see if I can do something in 5 minutes, but it always ends up being 15 minutes or longer. But I hope that information helps you. That was your alpha for the day. Stay safe and happy trading.